Hi, I'm Pete Andresen with Andresen & Associates, and I'm back from my hut-to-hut skiing in Norway. I got to tell you, that was a wonderful break. Now I'm back, and I'm looking at the first quarter of 2023, looking at those results in our portfolios and all around the investment markets. And I got to tell you, it was a good quarter all in all. I mean, I don't trust the results, but it was pretty good. The S&P 500, that's the mainstream stock market, was up about 7%. The NASDAQ, that's tech, was up about 16%. So what we saw basically was the investment world thinking that the Fed is going to blink. The reason they think that elevated inflation will remain with us longer. The Fed isn't really serious about combating it. Interest rates will come down sooner, was the banking crisis. We had a mild banking crisis. We had about 4 banks, including one in Switzerland, that essentially had to be bailed out in one form or another. And the way the Fed handled that was to make all investments whole. They totally overrode their prior restrictions on depositors' insurance and bailed everyone out. So that kind of largesse is making people think that the Federal Reserve is going to cave when it comes to fighting inflation, drop interest rates. Now, why they would think this is a bit of a mystery, because in the long run, if the Fed caves, it's not good news. It means inflation becomes as invested in the overall financial structure as if termites invaded your house and you didn't treat the house. But that's what they think. Bitcoin went up and risk-on investments went up in general. Bonds went slightly up. The thing about the stock market was up in January, down in February, and back up in March. It was a wild ride, and investors aren't so sure because they're guessing. Let's see what happens. Meanwhile, our portfolios were diversified, so we got some of this action. We got some of that mild up in the bond market. We didn't get the full ride because we weren't fully invested in the stock market, because I'm diversified, because I don't trust it. That yield curve that inverted last year, that's usually a sign. In fact, it's historically in modern times always a sign that a recession is out there, and a recession still might be out there. I can't really tell you if it's going to happen or not. This might be the first time we have a soft landing. One thing that is interesting to me is we have not had the corporate earnings decline that usually tells us a recession is underway. So this could be the first time. So we participated, but not fully. I have great doubts about this extreme euphoria, as indicated by the Bitcoin rise. I have an eye towards the bargains in the financial sector. Charles Schwab is still down 36% for the year. Facebook, that's Meta, was up 70% in the first quarter. But since it was down 65% in the prior year and percentages going down are bigger than percentages going up, it's not fully caught up with where it started 2022. Anyway, it's been a wild ride. We're very, very, very diversified, and I'm being patient. Watch me look for bargains. Meanwhile, enjoy spring. Thank you deeply, and blessings.